deprive myself from a good trade, or and just say I'm not going to do anything because of this and deprive myself of a good trade, or not. It's a subjective question. It's completely up to you. There is any the right answer, the correct answer, is only what you perceive is right for you. That's the only correct answer. So if you feel that you want to let this one go and you expect that weakness in the dollar, or well, I mean, if you're expecting weakness in the dollar, so you're right, you want to be by the Aussie, so that's fine. I mean, I again, this is what the charts is showing, but I really don't take too much of it. But anyway, I mean, there is so much mess going down in this area. I mean, if somebody lights a match, the whole area is going to go up in fire. Not even a warship, I mean, just lighting a match. I mean, it's so ridiculous what's happening over there. People stop smoking there. Anyway, so let's see what we have on the intraday chart. Okay, we closed the week at 101.40, 101.43. We have our strike, so we'll buy it above the high, which is probably not much. It's about 10 pips away. So we'll buy it 101. 55, and I'm going to place the stop below 101.20. Okay, the selling point is quite easy, guys. It is, let me show you the selling place where we're going to place our selling point. Right here we're going to be buyers right there, and we're going to place our long stop here. You guys draw lines where I write these numbers, and our shorting point is, this is where we're going to short, below the 1007, and if we do, we're going to place our stop. Unfortunately, we're going to place it exactly where I have the long stop at 101.20, so I'm risking 40 pips on the short side and 40 pips on the long side. So the Aussie dollar we're going to buy at 101.55, and my stop is going to be the 101.20. Yes, you can, Joa, but at this stage of the game, that would be a scalp. Okay, but you can, yes. We are going to go short again. The reason, Joa, can you look at this? You see when it broke here below the 101.13, this is as far as it went. I mean, when it broke right here, when it broke it, this is as far as it went. So you'll expect the similar behavior, so it should come here. So if I'm going to go short, I might as well take it from here. Okay? But you can, as long as you know what you're doing, you know? That's why we do this stuff, and that's why we always have the same way and the same reasoning when we get into the trade, so we know exactly how we're going to manage our trade. We don't get confused. Okay, this is an Elliott wave 4 or 5, I'm gonna let it to go. No, this is the entry, and this is the behavior, and this is the expectation. You have an entry, a behavior, and an expectation, so we don't get confused. And if we get confused, we can turn around and go the other way. Okay, that's our short point, and I'm going to place my stop again the same as this one here, and my structural short is the 98.45 is still the same, and my structural long is still the same, the 101.82. So this is the Aussie dollar. We'll buy above 101.55. We'll place our stop 101.20, so we're risking 30 pips. Our structural long is the 101.82, so we have 32 pips away from the structure. That's quite inviting. And we will, again, it's a good cushion for us to take the trade. We're also looking at the short to go short below the 1007, and if we do, we're going to place our stop above 101.20, which is about 50 pips, and the structural short is the 98.45, and the structural short is the structural long is the 101.82, and the structural short is the 98.45. All right.